Hello everyone, I'm Stephanie Tsai in New York. It's Monday, March 19th, I should say. Breaking news at this hour about Apple. The company announcing just minutes ago that it's going to start offering dividends and will buy back $10 billion of its own shares. Joining me now to talk about the big news of the morning and discuss all the business headlines is Ellen Breitman from Bloomberg TV. Good morning, Ellen. I have no idea what day it is.
It is Monday. We can
Apparently
say that
it's Monday the 19th. Let's start with this breaking news about Apple, both a dividend and a buyback plan. Give us the details.
Right. So they came out over the weekend, said that they were going to be holding this conference call with investors, put out a press release 1 hour ago, started a conference call half an hour ago that just wrapped up. $2.65 a share is going to be the dividend the company is paying starting in July. It's not paid a dividend since 1995, before Steve Jobs came back. And as you said, buying up to $10 billion in shares. And that's going to be over a 3-year period. You put it all together, and the company says its plans to spend $45 billion over 3 years. Keep in mind, it's a company that is approaching $100 billion in cash on its balance sheet. And we know it said it had another record weekend for the iPad that just came out on Friday.
Right.
The cash keeps flowing in. So it's not like they're going to deplete the money. It really just keeps coming back.
It's an almost incomprehensible amount of money, even for the market, I think. As far as this dividend, do you think this is something the company wanted to do, or were they sitting on so much cash they really had no choice?
As the cash pile has grown and it's come out with successful product after successful product, also, of course, the iTunes store, there really has been growing pressure from big shareholders to do something. Apple and Google are the only two tech companies with market values over $100 billion that don't have a dividend. So, whereas it used to be tech companies didn't pay the dividend, that's really changed in the past few years. So, again, it wasn't historically what the company has done, but it has so much money. And then increasingly, it did have this pressure from shareholders. And Tim Cook, really, since he became CEO several months ago, a lot of the focus has been, is he more open to doing something like this?
What is the purpose of the buyback part of this?
So what the company just said on the conference call is they're looking to protect employees from shares being diluted. Look, we know the stock has been on fire. It's up 45% this year alone. We know it's become the biggest company by market value in the world. Well, keep in mind, as companies put out more shares, for example, if it is that they're going to be rewarding employees that way, they want to maintain the value of each of those shares. So this is one way that you can do it. But again, also, they have an awful lot of money that's sitting there. Though I do want to point out as well, the company in the press release talks about, even though it's paying out all this money, it still has plenty to continue to do. For example, the store expansion that it's doing, a lot of that is focused overseas, to do any kind of strategic deal it wants, for example. So there's plenty of money to keep investing in the business as well.
What are Apple watchers saying about whether Steve Jobs would have done this or whether he would have approved?
Right. Well, again, it's not something he did. And certainly there was plenty of cash on the balance sheet through him being CEO. And the conversation really did start to change when Tim Cook came in. But, we can't forget, Tim Cook was really Steve Jobs' chosen successor. So, they clearly saw eye to eye on enough that Steve Jobs really wanted this person to be the one to carry the company forward.
That's a good point. All right, let's switch gears to the other news. The S&P has moved up the past 5 weeks in a row now. Treasury yields are near their highest level since October. What is behind these trends, Ellen?
They really reflect the fact that the economy continues to grow. There had been the concern about whether we'd be able to sustain this recovery that's underway here in the U.S., given the fact that gas prices, for example, are moving higher. But so far, the reports seem to indicate that, in fact, we are keeping on track. But we also want to point out a theme that we've talked a lot about in recent weeks is valuation. So even though stocks are moving up, we want to remember companies have been making more. But stock prices are not going up so quickly that stocks are getting expensive. In fact, by historic standards, they're not expensive. And you could say that they're undervalued in some way. So you have investors being bullish on the economy, but some might say not overly so.
And that leads to my next question, which is that market volatility has been down. What is the reason for that?
Yeah, in fact, what we found here at Bloomberg, colleagues of mine on the stocks team here, is that daily price changes are down the most in 8 decades. And we are seeing the smallest swings that we've seen since 1995. And it really seems to indicate the incredible fear factor is not there. You know, you think back to the financial crisis, the wild swings that we would have, that we had also kind of in the depths of the debt crisis in Europe in the past year. And a lot of that fear really seems to not be in the market right now. Another recent trend is that trading volume has been going down, and something that seems to show is some investors are just sitting on the sidelines. Either they're content where they are now or they're waiting to see what happens, but they're not in and out of the market all the time.
All right, let's talk about OPEC. OPEC nations have been plowing cash actually into U.S. treasuries. Why now?
Yeah, in fact, more than 50% faster rate, meaning the OPEC nations, than all other foreign investors in U.S. treasuries. It's the oil story. Oil is priced in dollars. And therefore, we know, because oil prices have been surging, the OPEC nations, the oil producers, have a lot more cash. They have a lot more dollars on their hands. Well, what do they do with those dollars? You know, often, as we know, the U.S. is seen as the safe play, as the attractive play. And right now, it's not so much a safety play, but it's that they've got these dollars they have to put somewhere. And this number I found staggering. Oil is up $26 a barrel since the end of September. And what that means is $780 million more in profit every day. So again, you know, Apple had its cash problem. Well, these OPEC nations have a cash problem too, right?
It's so weird for me to hear cash and problem in the same sentence. Let's move on to UPS announcing a plan this morning to buy one of its rivals. What are you hearing about that deal?
TNT Express is the name of the company. It's a European shipping company. It's a challenge to Deutsche Post. We're all more familiar with the company that Deutsche Post operates, which is DHL, as the package delivery company. $6.8 billion is what they are going to pay. It's an increase of a bid that they had expressed earlier. Deutsche Post, of course, is now saying, we think regulators are going to be taking a really close look. UPS says, we think regulators are going to approve the deal. But no matter what we say about it or what regulators say, clearly it's a play on expansion in Europe. Okay, the economy may be slow there, but certainly it's a big economy no matter what.
Sure. All right. Another company making a play, Starbucks. They begin a new venture today, opening its first juice store in Bellevue, Washington. Are these stores going to be as ubiquitous as the company's coffee houses?
You know, so we're talking Evolution Fresh. They bought the company several months back, and the company didn't have stores. Evolution Fresh didn't. It had packaged juices, fresh packaged juices. And so this is the first store, and it is part of a plan to go nationwide with this. Starbucks has been expanding its grocery business. It's been doing things in its store to try to bring in people off peak hours, meaning expanding food so it can get people in during lunchtime, for example. It's been experimenting with alcohol so it can get people in the evenings as well. We don't have a date or locations where it plans to expand outside of Washington, but definitely, again, this is just the first store, and it's going to, they say, be a big business. And it's interesting here, you know, Stephanie, you and I here who live in New York City, these fresh juice places are popping up all over the place. And actually, just as I was walking over the camera to talk to you guys, saw a headline that crossed that Jamba Juice says it's going to be hiring 2,500 summer workers. So clearly the juice craze seems to currently be in place. One other just point here is it's not cheap. You know, we took a look at, say, you buy a large juice and you buy a sandwich at Evolution Fresh, you're talking about like $15 or more. So it's not cheap. Yeah.
That's some fresh juice, I guess.
They're a little addictive. If you've had them, you're like, oh, they're so good. But it's like, yeah, it could be $6-7 for a juice.
Yeah, well, you know, fresh fruit is expensive. Anything else you're watching today, Ellen?
You know, definitely we're watching here what's going on with the markets, because it's that story we were talking about volatility really not being there so much. So we're pretty flat right now. But we want to remember the S&P has been up the past 5 weeks. Right now, the S&P is flat. The Dow is currently down 0.2%.
All right, Ellen Breitman, busy morning for you. Thanks so much for joining us.
Thanks, Stephanie.